Welcome to Petros Family Wealth. Today we're going to talk about life insurance, specifically for younger folks. We just recently had a couple conversations with some clients having kiddos, and unfortunately I'm usually the Debbie Downer that has to talk through some of the worst case scenarios. And so we're going to touch a little bit on life insurance, go through our thought process to help our clients determine what the right amount is, what type, and so that to arm you with some ideas and for you and your family. So let's go ahead and dive in. So first thing I want to touch on is the type, and we generally lean towards term insurance and not the permanent or cash value. There's a number of reasons for that, but I'll just say if you're presented with an idea of a permanent life insurance policy, also ask for a term insurance quote as well. And then whatever the premium differences are, throw that dollar amount every month into a balanced fund, S&P 500, even a target date fund, and see where the growth is at the end of the term and compare that to the permanent life. Most folks probably won't show you that because the permanent life insurance won't look so great compared to that idea. So we lean towards term, but the biggest question usually is how much. So I'm going to give you two thought processes. The first one is more expense-oriented, replacing or prepaying a number of expenses to help your spouse out. And then I'm going to show you another one idea. It's full income replacement. And then I'm going to touch on the term or how long we might want to consider having that life insurance for. And then also touch on the Social Security. So as far as how much, one thought process is the prepay expenses. Let's say, for example, we'll need some daycare or a nanny. In Minnesota here, daycare is around $25,000 a year. Make it simpler there. And so if we have two kids, and then let's say we typically would have for 5 years before they get into school, that would equal $250,000 just for that one expense. The other possibility is a mortgage. So I'm just going to use in this example $400,000. And then supplemental income, that might be, for example, I want to provide my spouse 3 years or 5 years of my income just to help supplement. There's probably going to be a lot of unexpected expenses and kind of hard upfront. So whenever you do these numbers, generally it's recommended to kind of round up. But let's say $50,000 of income for 5 years. That's another $250,000. And so in this example, we would be sitting around the $900,000 range. And you can plug in your numbers, maybe there's some other expenses, but those are usually the top ones. Mortgage, kiddos expenses, and then maybe some supplemental income. Now this other idea, full income replacement, this is where it gets a little mushy. This is one I prescribe to, but particularly if you are a sole income earner, this one probably makes sense. The other thought process is that I had was that I would never want my wife to have to remarry out of financial need. If she had to remarry, she'd do it out of love. And so therefore, I went with this approach. And so as an example, I did $70,000 a year of income. And in order so that this income would be sustained at least for the next 35 years, there's a number of studies called the safe withdrawal rate that lean towards a 4% withdrawal rate, and that increases with inflation over time. And so if we took $70,000 per year, divide that by the 4% withdrawal rate, that would equal $1.75 million of death benefit. And as far as the length of time, generally we like to have this term where we're renting some of that insurance to land maybe a couple years before retirement. And so if you're in your 30s and you're shooting for retirement in your 60s, that would equal a 30-year term. But a couple things, especially if you're going for the larger amounts to care for the spouse there and getting it on each other, it may not be feasible in the budget. And so bringing that down to a 20 or 25 year would likely save you some money here on the monthly expenses. The other thing to note is that your family may be eligible for some Social Security benefits. So Social Security originally was meant for orphans and widows, and then expanded greatly over the years. And so you can actually see how much income you might get, your spouse might get, or your kids might get if you go to ssa.gov. And it's about a 2-page report that you create your own user ID. And it's a statement showing how much your spouse and kids might get if you were to pass away. And then you can use that dollar amount, monthly amount, to maybe reduce some of these other death benefit needs. So I hope you found that helpful and that thought process helpful. And if you did, please like, subscribe, and hit that notification button. Thank you.